Hi, Julian DeRosier from the IIF, International Investment Forum, here in Mining Indaba 2022 in Cape Town, South Africa. I'm joined with Luke Alexander. Hi, Luke.
Yeah, hi.
How are you doing?
I'm doing great. How about yourself?
Very good. How great it is to be back physically in a mining event.
Yeah, no, it's been fantastic. I mean, one of the things you forget when you don't get to do these live events is how much you run into people that you know and all the business opportunities that come from that. So, yeah, no, it's been great to be back in person.
Absolutely. So, Luke, CEO of Newcore, maybe you want to first of all tell us in which commodity Newcore is.
Gold. So we've got a district scale exploration project in Ghana, the Enchi project. It's about 216 square kilometers in size. Currently sit on a 1.4 million ounce gold, 43,101 inferred resource.
This sounds like great numbers. Grade?
Grade is 0.62 grams per ton, so it is a heap leach project. We did put out a PEA last year, which outlined very robust economics for a heap leach project. At an $1,850 gold price, you're looking at an after-tax NPV of $302 million, after-tax IRR of 54%. So it is a high-grade oxide transitional resource at the moment. We are in the process of starting to drill into the sulfides as well, so that's something we're excited about.
Absolutely, and one of the metrics you just gave, which is IRR 54%, I think that this needs to be a little more talked about because this is very impressive value. We see a lot of PA coming out within the 20s, maybe a little within the 30s. Within the 50s, there's just a handful selection of projects that are there. So what makes your project so cash efficient?
Well, I think there's two things. One is the grade that we talked about. If you look at heap leach projects globally, you're typically looking at 0.3 to 0.5 grams per ton. So as a result, our 0.62 grams obviously helps drive the economics. The other big thing that really helps drive the economics is a heap leach project costs a lot less to bring into production. So our project, you're looking at $97 million of capex, and that produces that $302 million NPV that I talked about. So one of the other metrics that a lot of our institutional investors like is the fact that for every dollar they put in of capex, the 97 million, they're getting $3 back, the 300 million. That's a very good ratio, and that obviously then, results in the very high IRR of 54%.
Well, this is great to hear. Sounds like a wonderful project. And moving forward, so you had PA stage, meaning more drilling, more definition, meaning another feasibility study surely afterward or so on. So can you tell us a bit of the roadmap of the next 12 months?
Yeah, so the interesting part is that the resource update, the 1.4 million ounces and the PEA that we put out in June of last year, that only incorporated 20,000 meters of our current 90,000 meter program, plus the historical work that had been done on the project. So we've got an additional 70,000 meters of drilling that will go into future resource updates. One of those we've got planned for the end of this year, as well as future economic studies. So our view is that with all of that drilling, we're going to be able to meaningfully expand the overall size of the resource, and then on the back of that, be able to outline a much larger and even more robust project than what we've got today.
So with such strong economics, let's talk about non-economics factor. What is your footprint in Ghana? What are you guys doing locally? And how do you view the collaboration between locals, you as a mining, and basically as an actor of society in general down there?
Yeah, so one of the things that we fundamentally believe in at Newcore and I believe in is ultimately the best way to push a project forward is to make sure that all stakeholders benefit in that project, whether it's the local communities, whether it's the local government, or whether it's the national government. So we fundamentally, as a result of that, look to move the project forward in as sustainable manner possible. I mean, we do lots of things on the ground in terms of working with the local communities, making sure there's employment. So yeah, we're very conscious of that. And the other big advantage that we have in Ghana is that all of our employees are Ghanaian. From an ESG perspective, all of the individuals who manage and run that for us, they're all from the local town of Enchi. So as a result, we are able to really differentiate ourselves in Ghana.
Absolutely, and on that, well, everyone's dropping ESG is a big thing, but giving employment, we tend to forget that we talk less about it, but there's human stories behind it. So be able to empower those people by giving them job, being part of a project that they're seeing develop and being proud of, I guess also makes you very proud.
Absolutely. I mean, again, one of the big benefits in Ghana, it is Africa's largest gold producer. It's the 6th largest gold producer globally. So, produces 5 million ounces a year in Ghana. So with that, you get a huge amount of skilled labor in country. So we really benefit, from that. We're actually able to attract people back to Ghana who've worked all over Africa because they're proud of their country. They want to see a project in Ghana moving forward, so we can really benefit from all of that. And then the local communities, absolutely, by being able to create jobs and upgrade hospitals and install water wells and all of these things to benefit the communities as a whole. I mean, that's something that, yes, we're very proud of as a company.
That's really great to hear. So maybe more on a closing statement, share structure, a little more technical share structure and cash on hand and so on.
Yeah. So in terms of, so we're listed on the TSX, NCAU is the ticker. We also trade on the OTC QX and in Frankfurt as well. So we've got 121 million shares outstanding, no warrants, and I think the fact we haven't had to offer warrants really speaks to the quality of the asset and the team. At the end of 2021, we had $6 million of cash that fully funds us for our entire 90,000 meter program, as well as the resource update at the end of the year. We own 27% of the business as management and directors. So as a result, we ultimately think as shareholders first. So that's one of the big reasons why we run a very low G&A. And then also from a capital structure perspective, we're very fortunate to be currently 40% owned by institutional investors, primarily deep-pocketed mining and precious metals focused investors who really recognize the district scale exploration opportunity that we've got at our Enchi project. And then the last thing, we've currently got 5 tier 1 investment banks out of Toronto who are covering us from a research perspective. So that again, adds a lot of support for the company.
I think that one of the strong points of your company is obviously your share structure. No overhanging warrants, nothing of that sort. What you see is what you get. It's not a common story, obviously, on the TSXV. 27% ownership from you guys that are actually managing the assets, that understand the dilution, understand that every time you go out there, you're diluting your own position or you have to put more cash in. I think an investor can really have confidence on the fact that you will behave in the best possible way for shareholders because you're a major one.
Absolutely, and I think when you look at successful companies, and I started my career on the investment banking side of the business, worked with mining, tier 1 mining companies on the ASX, TSX, London listed market, and one of the things that I learned through that entire process and period is that one of the big differentiators for companies is ultimately management ownership, because it truly aligns them with shareholders. So yes, I think it is a very important thing, and hence the reason, we've always written checks alongside the investors who invested in our company.
Well, this is great to hear. Good things happening on the ground, good thing happening in the office. This is very good. Well, Luke, thank you very much for your time. It's all the time we had, and we're very happy to have had a Newcore with us today. Thank you very much, Luke.
Yeah, thank you very much.